Hi everyone. So today we're going to start working on looking at retirement and income. Okay, so we're going to look at how we're going to be able to plan for retirement, and we're going to look at this a couple of different ways. Today we're going to look at income from your savings. So what you can do to have savings put away so that when you're ready to retire, you have money put aside. All right, so we're going to take a look at how we're going to calculate some future values, like how much if I put this much money away, how much am I going to have when I retire? And then the other way as well is like, I want to have this amount of money when I retire, how much do I have to put away when I per month? And then take a look at how taxes affect your savings account. And then we're going to take a look at if you have an employer matching how much money you're investing in a retirement account. So we're going to do this in two videos. The first video is going to be all of our terminology, and then our second video is going to be our problems. All right, so keep in mind that retirement is when a person is stop working, that you're like, nope, I'm done. I am going to enjoy some things. I'm going to travel. I'm going to play with the grandkids. I'm going to take care of my house. I'm not going to be working anymore. Now, you can also be semi-retired, which is a person who only works part-time when they hit the retirement age. Now, all of your money can be pre-tax, so that the deposit that's made to a retirement account is deducted before we take a look at taxes. And we talked about that before, that we can take it out pre-tax. But it's not taxed. But pre-tax investments are lower person's taxable income. After-tax investments, this is money that's used for investing that's already been taxed. And then we're going to look at how that affects us. So there are some most common retirement plans. The first one is an individual retirement account, or most familiar with the IRA. This is an account opened by an individual rather than sponsored by an employer. So when you are going out to your first job and you want to start saving for retirement, and I highly recommend you do this, even though you think you're not going to have any money when you first start, I'm telling you it's going to be worth it. That you want to open an IRA and have money deducted from your account, your paycheck every week or every month to go to your retirement account. So there's several different ones. The first one's called a traditional one, which is a savings plan which income generated by your account is tax deferred until the withdrawn from the account. So you don't pay taxes on it when you put money in. You pay taxes when it comes out at the end when you're retired. So remember, taxes are paid at the time the money was withdrawn from the account, not when the money is earned or put into the account. Now, there's also the Roth IRA, and these are the deposits that are taxable when you put them in, but when the money was withdrawn after having been there at least 5 years, and the saver is at least 59 and a half years old, the money and the income is tax exempt or free from all taxes. So there's the two different versions. One, the money goes in and it's not taxed when you deposit it, but when you withdraw from your IRA, you have to pay tax on it. Or you have the Roth IRA, when you put money in, it's taxed, but when you take it out, it's not taxed. But you have to meet certain requirements, like it has to be there at least 5 years, and you have to be 59 and a half years old. And again, tax exempt is money that's not taxed. Now, there is also the 401k. Now, the 401k is a retirement savings plan that's sponsored and set up by your employer for its employees. Like other retirement plans, there's strict rules when the money can be withdrawn. So if you withdraw too early, you're going to have to pay tax or you're going to pay a penalty. And there's strict limits on the contributions and they change from year to year depending on what the rules are. Now, there are other IRA plans. So there's the SEP IRA plans and the Simple IRA. These are retirement savings plans for self-employed individuals. So if you own a business, this is the type of plan in which pre-tax money is invested and is tax deferred until it's withdrawn. And then there's the 403b. This is tax-deferred retirements for employees of educational institutions and some nonprofits. Okay, so these are things that people put money into so that they can retire. All right, so let's take a look at some examples in our next video.